Good morning and welcome to Sunday's Join the Dots, and this is the day we normally do a market wrap up because obviously on the Saturday edition I'm recording that Friday morning. So I've got all the results here of the week. First of all though, I'll start with a Michael Cowan piece, and I'm going to link number 1. Now he is talking about the CDS market and the surge in rates. This is so vital. As we always say, follow the money. Okay, follow the money. And the money is saying more risk, a lot more risk. Okay, we saw it with Bitcoin all week. And here Michael Cowan is talking about the general economy. He's talking about jobs in the US. He's talking about housing in the US, where more markets are rolling over now and showing falls. And he's also talking about retail and the fall in sales. Now this leads us into link 2, Eurodollar University. And the key takeaway from this is that it's not that retail sales are collapsing, it's that they're changing. And it's Home Depot and Target are losing customers and losing sales to whom? They're losing it to Walmart. People are trading down. Okay? You don't have to be a genius to understand that that means people are struggling. They're trading down. Even middle class, middle income people are leaving Target, they're leaving Home Depot, and they're going to Walmart. That's big. Okay, so I'm going to link that for you. I'd say watch it because it's more interesting than you think when you actually listen to Jeff. He's very good. The only caveat is do not, in my world, I would not lease my gold if I had gold. I wouldn't lease it. Okay, I know they always bring that link in. All right, so on the week, those are 2 good links to watch. Okay, Michael Cowan, very good because it's jobs, housing, retail. Okay, and it's the credit default market surging. That screams the money doesn't want the risk. And we saw that in the week, didn't we? We saw the crypto market got very, very hit hard. Bitcoin was 8% down in the month. In the week, sorry, 5 days, 8% down at 84. And this comes on to my main story today, which I'll bring you in a second. XRP got hit because some people, most people, the market considers XRP as a crypto coin. It's not. It's a utility. And it will be used as a utility through the Ripple network, and it will have a function. Bitcoin has no function. Has no function. Everyone calls it digital gold. Rubbish. There's nothing behind it. Gold has gold. You have an ounce of gold. Bitcoin, you have nothing. Okay, I'm sorry, I'm very simple on this. And you might say, yes, he's simple on this. I'm not, because it has no value. And when push comes to shove, people want real things. They want real value. So gold, yes. Silver, yes. Other commodities, yes. Copper, zinc, palladium, platinum, maybe. I don't go there. As you know, I've said it before, I take the bird in the hand. If I know gold and silver are going to appreciate hugely, why do I need to forage in the bushes for things like platinum, palladium, uranium, and I don't need it. Okay? I stay simple. Keep it simple, stupid, as they say. KISS principle. Right, what else have we got? We've got gold was down 1%, so not really moved. Silver 2%, just under 50, closed at 49.97, so it's going for a 4th shot of 50. That means the ratio is now 81 again. Gold to silver, 81. It's too big. Okay, it's going to come down to 30-ish, 20-ish, 10 at a push, Francis Hunt, the market sniper, says. Generally, if you get a real crisis, and we'll come on to that, then silver excels over gold. And that ratio of 80 comes right down to about 10, 15 in a crisis, like we saw in 2011. So that will happen. Anyway, Agnico Eagle was 4.3% down, no worries. Pan American 3.5% down, again, no worries. It's just the way the market's moving. I'm not worried about that at all. I am worried about certain things. I am worried, but I'm excited because they lead into our general thoughts. Japanese 10-year rate up 8 basis points, 5% if you do it in percentage terms, from 1.7 to 1.78. The Japanese 30-year, 3.23 to 3.29. They're just moving up. And remember, we could at some stage, if the Fed decides to cut rates under pressure from Trump, we could have a a severe narrowing of that gap between the Japanese and the US rates, which then leads to a need by people to unwind the Japanese carry trade. And that takes you back to the Jack Claver video, which I featured in, I think I called it XRP, the exit. Anyway, it's on our list of videos that we presented to you. The US 10-year fell from 416 to 406, so that's coming down and the Japanese is going up, and my thought is they will meet at some stage. What was the Dixie? Now, again, when I first started this service, I said that everyone was killing the dollar off too early. And now we've seen the Dixie this week go over 100, okay? So it's gone from 97 to 100.2. It's gone up 3% since we started in July. That's a big move. It's a big move. And what it shows you is there's fear in the market. When there's fear in the market, people will go for the dollar. Because at the end of the day, it is the place that people will go. They just will. Okay, so don't buy all the noise, all the fear, all the rubbish that people talk about the dollar being finished. It's not. And that's what I said in July, and we've seen a 3% move up. S&P was down 2.2%, so nothing really big there. I want to come on to NVIDIA, and I want to come on to AI. And this really needs to be our focus, okay? I've given you the two links. Let me try and make my phone come to life because I've got to read a lot for you here. Okay. Now, this is a very interesting piece that came to me from someone who is quite well connected and gets good information. Let's have a look. I can't, now, with all the caveats, as it starts with, I can't verify all the facts, but worth a read. Breaking. The 610 billion AI Ponzi scheme just collapsed. Okay, that's a bit dramatic, isn't it? But let's go on. Last night at 4 p.m. Eastern Standard Time, something unprecedented happened. Now, unprecedented gives you a clue. NVIDIA stock rallied 5% on the earnings, then crashed into negative territory within 18 hours. Now, I checked that, and I see that NVIDIA rose up to, let's have a look. I did write it down here. It was down 10% from Thursday evening. So it announced its results, it got a kick up, but then it was sold off. 10% from Thursday night to Friday closing. That's a huge move. So let's go back to this piece. So it says, unprecedented. NVIDIA stock rallied 5% on earnings, then crashed into negative territory within 18 hours. Wall Street algorithms, now this is coming from a connected source, Wall Street algorithms detected what humans couldn't. The numbers didn't add up. Now, again, these numbers I can't verify. I haven't checked them all, and there's no way of checking them all because only the company will know what the truth is. And as we saw with Blackstone the other week, the company was good one day, 7 days later it was in liquidation. So you cannot, at this point in a cycle, at this point at the end of a cycle, you cannot trust companies what they say. You can't trust them, okay? You have to go a little bit on instinct. And this piece is well written. Here's what they found. NVIDIA reported 33.4 billion in unpaid bills, up 89% in 1 year. Customers who bought chips haven't paid for them yet. The average wait time for payment stretched from 46 days to 53 days. That extra represents 10.4 billion. This piece says that may never arrive. Well, we don't know that, that's for sure, but there we go, that's up to NVIDIA. Meanwhile, NVIDIA stockpiled 19.8 billion in unsold chips, up 32% in the last 3 months. But management, let's have a look. Management claims demand is insane and supply is constrained. Well, why has it got almost 20 billion extra chips on in its inventory? Okay, either customers aren't buying or they're buying without cash. Both ways, it's hurting. Okay, the debtors are increasing, the stocks are increasing. Doesn't look right. The cash flow tells the real story. NVIDIA generated 14.5 billion in actual cash, but reported 19.3 billion in profit. That can happen. Okay. Healthy chip companies like TSMC and AMD convert over 90% of profits to cash. NVIDIA converts 75%. That's a distress level in the world of TSMC and AMD. Right. So, but here, and this is what it says in this piece, so don't quote me, it's not me saying it, I'm reading it. Here's where it gets criminal. Okay, so you have to be careful with that. All the caveats, it's not me saying it, I'm just reading what I was sent. Nvidia gave 2 billion to XAI. XAI borrowed 12.5 billion to buy Nvidia chips. Microsoft gave OpenAI 13 billion. OpenAI committed 50 billion to buy Microsoft Cloud. Microsoft ordered 100 billion in Nvidia chips for that cloud. Oracle gave OpenAI 300 billion in cloud credits. OpenAI ordered Nvidia chips for Oracle data centers. Now, it's very complicated, but what it really says to me is everything is very opaque. And it would be no surprise at all to see the whole thing fall apart. It would be no surprise at all. Okay? And that's backed up by a very good economist who I met in Dubai once at a presentation by HSBC. And his name is David McWilliams. He's very humorous. And David, and I'll link his piece, AI is undoubtedly going to crash, he says. Going to crash. And he's a serious guy. He's got a good sense of humour, but he's serious when he says something like that. Okay? Then I see Fortune magazine, and they come up with an article and say, oh sorry, this is the same article, it's in Fortune magazine, and it's David. And he says, the AI's ecosystem is built on digital lettuce. He has got humour. It's built on digital lettuce. Okay, so we go back to this piece that I was sent and I'm reading. AI company CEOs admitted it themselves last week. Airbnb CEO called it vibe revenue. OpenAI burns 9.3 billion per year but makes 3.7 billion. Well, we know that. And we know that OpenAI is the vulnerable one. It really is the vulnerable one. That's a 5.6 billion annual loss. And we know that the valuation that OpenAI was given was just ridiculous, given where it is now. Okay? But we've seen it before with things like Amazon. But then Amazon came through a period when there was no issues from 2000 through to whenever. We are in a period of massive issues. We're in a period of massive doubt. We're in a period where credit default swaps are surging, where Nvidia can go up 4%, down 10% in 24 hours. Okay? We don't trust the system. No one is trusting the announcements. Okay? And that's why the credit defaults are surging. Okay, people don't want to take that risk unless they're paid handsomely for it. Okay, Peter Thiel sold 100 million in Nvidia on November the 9th, and SoftBank dumped 5.8 billion on November 11th. I've checked those, that checks out. Michael Burry bought put options, betting Nvidia crashes to 140 by March 2026. He's not an idiot. Bitcoin, which tracks AI speculation, dropped from 126,000 at the beginning of October, and we saw that, to 80, well, what's it today? It's not even 89, that piece said. It's 84,544 this morning. So that's a 29% crash. It's a bit more than that. It's a 33% crash. AI startup sold 26.8 billion in Bitcoin as collateral for loans. Hold, not sold, hold. AI startups hold 26.8 billion in Bitcoin as collateral for loans. Are they going to come under pressure? Are they going to have to top up with cash, or are the lenders going to have to sell some of those Bitcoin? The thing is, it's all getting incredibly interconnected, isn't it? Okay, and it's interconnected with probably half-truths. And if you've got a very complicated web of interconnected half-truths, the chances are when you get to the end, it's not a good place to be. Okay, so that was a piece that came into me. It doesn't mean it's 100% right, but in essence, I think the tone is correct, and I think the risk is enormous. And that's again why I say to you, as the markets reveal the truths, okay, as they come out, whether it's China, whether it's US, whether it's Europe, as these truths come out, the markets are going to run for cover, and they're going to run into something that they regard as safe. And I see that at this time as gold, silver. And I still see XRP as a utility, not as a Bitcoin. It's getting associated with Bitcoin at the moment, so it's suffering the same sort of falls as Bitcoin in a week, 9%, 8%, but it's nothing like Bitcoin. And if you don't understand it, don't invest in it. But if you do understand it, you'll see the logic. Okay? Thank you very much.